Super Bowl Sunday is coming up this weekend. Last year's Super Bowl was so overrun with crypto ads, including from Coinbase, Crypto.com, and FTX, that it became known as the Crypto Bowl. Following a year of crypto price collapses and a wave of industry bankruptcies, plus with layoffs rather than expansion the norm, it's been a stark change for digital assets. Joining us to discuss is Thomas Perfumo. He's the head of strategy at Kraken. Thomas, thanks for joining us. So how is Kraken doing in the wake of the FTX collapse? And what do you see as the future of centralized exchanges in its wake?
Yeah, so Kraken specifically has had no material exposure to all of the volatility in the industry when it came to centralized firms collapsing throughout 2022. So we're in a pretty, I would say, privileged place, and it's really born out of how we've approached our business model over the last 10 years. Constantly focused on earning our clients' trust every single day, day in, day out, through things like proof of reserves, even before it mattered back in November in the wake of FTX's collapse. I think from our perspective, we're just focused on that long-term vision to increase and accelerate the adoption of cryptocurrency, and we're just focused on delivering a great client experience in the meantime. But this year in particular is going to be a year where we think we really need to step up and help rebuild a lot of the trust and reputation within the industry at large in the wake of FTX's collapse.
Sure. I mean, in the industry, we've seen a wave of layoffs, offices closing among various crypto firms. And in Kraken's case, recently they closed down the Abu Dhabi office less than a year after securing a license in the region. Also, last year, the company announced laying off about 30% or 1,100 of its staff. So, I mean, was that part of dealing with crypto winter, crypto contagion? And what's the strategy going forward?
Yeah, so the decision around the global workforce reduction was independent of any kind of event like FTX specifically. It's really following the broader macro trend. Of course, we see this, a lot of these actions in the broader tech environment as well. And so we're not insulated from the broader macroeconomic environment. So of course, crypto winter in general has definitely had an effect on the business, and we're responding to that. Our choices to close down some of these offices is really born out of the notion of we're trying to focus and narrow our scope over the coming years as we weather this winter and focus on what are the parts of the business that we think are going to drive the greatest amount of impact, again, along that vision of accelerating the adoption of crypto. And that was really the driver behind Japan as well as Abu Dhabi. These are really small parts of our business, and we're really just hunkering down and focusing on the big core parts.
There's been a lot of bankruptcies, of course, in crypto over the past year, Voyager, of course, being one of them. We don't hear much about Kraken picking over the remains like vultures. Why not? Why are you guys not trying to gobble up some of the assets of these other companies? Is it too expensive, or is there a problem with them, the kind of issues here?
Sure. I can't discuss any kind of specific asset in particular that we've taken a look at in the past, for example. These opportunities do come up, of course. I would comment that with these cases, it's quite complicated. So a lot of these business models, the reason why they failed is because they were outsourcing critical components of their business to a third party. So for example, in the case of Voyager or BlockFi, they had a lot of exposure to a hedge fund like Three Arrows Capital, for example. And Kraken has approached our business in a much different manner, where we've vertically integrated most of our different business lines. So for example, if we offer staking, we own the infrastructure in many cases to provide that service to our clients. We're not dependent or reliant on third parties that might have some kind of critical failure or taking excessive risks. And so when it comes to looking at these assets, of course, on a case-by-case basis, it can be quite different. But when you talk about these firms and how they collapsed and whatnot, there's of course a lot of liabilities that you have to take into account. And so it's not as simple as just paying a price and buying a whole bunch of accounts. There's a lot of other stuff under the hood that you really have to take into account from a regulatory perspective, a compliance perspective, and a liability perspective.
You mentioned that you were cutting back on some of your international operations in order to focus on what you say are your core businesses. Just to be clear, what are those core businesses? I mean, what are you doubling down on as you cut back on other things?
Yeah, so our core areas or regions that we really capture a lot of market is going to be in Europe in particular, but we also have a pretty large business in North America. We are a global company in scope, so when you hear about these more regional shutdowns, we're talking about limiting the depth of our servicing. So in some cases, we might not offer access or funding with the local currency. However, you might be in a particular region where if you have access to Bitcoin, you can still deposit that Bitcoin to Kraken and use some of our other services where it applies. So it is not impossible for people around the world, even though we might not have a local presence in any specific country, to access Kraken services. So when it comes to, again, like those core investments that we're making, we're starting and focusing on the biggest regions, which are Europe for the most part, but as well as North America. And we're also providing as much as possible global access to our services where applicable.
All right, Thomas, thank you for joining us. That was Kraken Head of Strategy, Thomas Perfumo.